Hey everyone, today we are sitting down with the Multifamily SoCal team to discuss sales comps and Q1. Today we are sitting down with Mike O'Neill, who heads up coastal Orange County, and also Andrew Boukather, who covers the inland and central Orange County markets. And we're going to dive into Q1 sales within the marketplace between 5 and 100 units within the market. So within Orange County for Q1, there was a total of 49 transactions that took place. The average price per foot was $445 a foot and $387,000 per unit. We're going to dive in on, what you're seeing in the marketplace, what's going on, and just to kick it off, great job with the 6 transactions that we closed as a team within this market, led by you guys. So very good job there. And then also, I think the most important thing is, interest rates, right? I mean, that's pretty much on every call. Can you talk to us about if that is impacting the market? Are you seeing that right now? What's going on? So Andrew, if we can kick it off with you.
Yeah, sure. I think that Mike and I might have different answers to that question just in the difference between our markets. I would say in my markets where people are sensitive to the yield, it definitely is impacting values or just the amount of buyers that we're having on every single bid sheet. It just seems like it's thinning out buyers. We're talking with a lot of 1031 exchange capital, and something that you've done an incredible job of, Dan, is speaking with brokers, bankers, and then our in-house debt platform at CBRE, staying up to date with where interest rates are, who the most competitive lenders are, and how our clients and us can stay the most nimble and get deals done. So I think you handling that has been a huge help to the team and the platform.
Appreciate it. It's a team effort.
Absolutely.
Mike, what are you seeing with interest rates? You're selling the really nice real estate up and down the coast where, there's always a high demand for people buying that. Are you seeing any change within the market because interest rates are rising?
Well, if you look at historically, interest rates are still very low, right? We can be in the high 3s, low 4s. This time in 2018, they were in the 5s, right? So the interest rates are still great, and people are pouring into the coastal markets based on tenant profile, property profile, appreciation, right? And with being able to increase rents about 10% coming up in a few months, it's, yes, I will, this is buyer speaking, I will buy in these 2 and 3 caps, suppress cap rates, but I'll be able to increase my rents up to 10% compared to cities, say in Santa Ana, where you're maxed out at 3%. Right? So you look at that, and with the cost of living, prices getting higher, people want to own a nice assets because in the future you're going to have appreciation. And I mean, there's only so much product on the coast, so there's no really new product being built. I'm a big fan of that area.
Yeah, absolutely. No, it's very exciting, listing properties within the marketplace, especially around the coast. We're seeing multiple offers. There's always that flight to quality. Like you said, people that are trading out from, an example would be like a Santa Ana. Maybe they're selling a bigger building. They want a 1031 exchange. They want to buy a nice coastal building. And you've got some really good assets in Dana Point, Laguna, Newport, Costa Mesa. And so they're not really tied so much as to cap rates.
Right. It's just more of, at the end of the day, investors, you want to, if you're investing in stocks, real estate, whatever that might be, Coinbase, crypto, you want to get those blue chip properties which are on the coast. And I'm a big proponent if interest rates go higher or if there's recession, all that stuff. I mean, nothing's resilient and resistance, but like as far as on the coast,
yep,
I can speak volumes to that because people are always going to want to live near attractions, water.
Yeah, that's true. I mean, that's where the tenants want to live.
Right, yep.
Right.
And I think we learned a lot about this in COVID when a great deal of people were working from home and not coming into the office. Most people were back in the office, but during that period, people got accustomed to working at home and they wanted to live near the coast, right?
Yeah, we saw rents really shoot up, especially, all throughout the market, but especially within the coastal markets where, for example, we had the 2-bedroom, 1 bath with a den. Now that den's converted into an office. People are working from home, got the double screens up, right? And, those rents shot up 40, 50% in the past 18 months.
And I mean, I'm even optimistic about the more central and North Orange County rents. I think that a lot of the people that we're talking with, all of our buyers or most of them, already own units in Orange County, and they're seeing when they get a vacancy the amount of inquiries they get on tenants going to lease their space, going to lease their unit, how much that rent has bumped. So if they do believe in Orange County, a lot of them live in Orange County, they like the story here, they think that, in 2023 there will be rent growth as well. So I think even with rising interest rates, that rent growth could just keep values improving even.
Right. I mean, that's true. That's a really good point. I mean, I really like the workforce housing just because it's essential. Everybody needs a place to live. It's still, people are going to flock to affordability, and those are the most affordable built, units in the marketplace. People want to live in Orange County. So overall, fundamentals are very bullish, very strong. There's been a little disruption maybe within people sharpening their pencil with interest rates, more or less in the Central and North Orange County markets. Coastal, you're not really seeing that. I mean, the bid sheets, the offer sheets that we're getting on deals, there's really no shortage of buyers within any asset we're selling, but especially within the coastal markets.
Yeah, it used to be on the coast when we presented offers to clients, we would do like a summary, right? Just an offer, and then now we'll have an offer summary of all the offers. We're typically getting anywhere from, it could be 4 to 10 offers per listing right now, if it's priced correctly. And from the day that we commence marketing, we're in escrow within 10 to 14 business days.
I mean, that's a good point. This isn't happening in Q1, this is more Q2, but the 10-unit building that we're just started marketing in Costa Mesa, we are already doing a summary sheet, and that hasn't even been on the market for a week, and there's, what are we up to now, six offers?
6 offers at this time. Come back to me in an hour, it could be 7. So,
Yep.
But yeah, you're right on that. And that was just, I think what is really important for people is to manage the process, and that's something that everybody here does well. And you manage people's expectations. We're not going to be those brokers who say you can get X price, but we deliver Y.
Right.
If we are going to say we're here, we're pretty approximate with that, and we're going to shoot you straight.
Yep. Say X, deliver X, or above X.
Yep.
But not trying to, purposely.
We're not going to try to buy a listing, right? And it's more of a relationship that we have too with people. It's not we just have a broker hat and they have a principal hat. If somebody trusts in us, if it's buying real estate, selling real estate, it's a relationship.
No, for sure. I mean, we do have people working our deals because we know that we have inventory that we deliver. So people are in a trade, they need something. If it's a broker, we cooperate with the market. If it's a buyer, they feel good because all our deals are vetted. They're straight up, everything's kind of front end screened so we can deliver something to them. That leads me to another point. With interest rates moving, what's interesting now is we are doing more loan assumptions, right? With that property in Costa Mesa, that would be a great loan assumption opportunity where you can assume the existing loan.
Yeah, the loan commenced in January. At that time, the seller wasn't interested in putting his property on the market. However, when opportunity knocks, he found an up-leg property and was like, okay, Dan and team, I need to sell this property now. It's got a 5-year loan that's assumable at a 3.56% interest rate. So in January, that was pretty much the norm, but now those rates are 4.25% with that same bank, and that's 75 basis point.
Yeah, that's a move for sure. So I think it's really important to make sure we do understand the debt process, the whole process of the buying and selling. What else other than rates are you guys hearing in the market? Anything that's a common trend?
I think something that's been a common trend over the last 6 to 12 months is the Santa Ana rent control, where you're held to 3% rent bumps or 80% of CPI, whichever is less. So we've seen quite a few groups start exploring their options when it comes to maybe selling in Santa Ana and going to a market like an Orange or an Anaheim or even Coastal, and getting Mike's Tesla and ride around and get something in Dana Point or Costa Mesa if you can get your arms around it.
Yeah, it's very competitive along the coast. But that's a good point because in Santa Ana we sold 2 multifamily assets in Q1, and I think what was really interesting was there was the rent control in place already, and the properties that that sold, we still hit peak pricing. There was really no discount to the restriction. I thought that was really interesting because that was a test of the market.
Exactly. I think that you speak with a lot of buyers. I mean, us being on the front lines, and especially in the North Central Orange County markets, they want a well-parked property. They want a property that was built in the 1970s or the 1980s. They want something with 2 bedrooms. And they look in Anaheim or Orange or Fulton or Garden Grove or Westminster, wherever you want to go, and it's very thin. So if you can maybe stomach that rent control, take a higher yield going in, there's an opportunity to get large units in 1980s construction and a well-parked property like the 13+1 units that we just sold on Civic Center with one of Mike's best clients.
Yep, of course. People are always going to find value in a market. I don't care if it's a good market, flat market, bad market. People are going to be able to find those values in what you can create with that. We're seeing some people now doing with these non-conforming units, make them legal ADUs. A client of ours is doing that in Santa Ana, has done it in Laguna Beach, created value that way. And then also if people own a large piece of land with a couple units on it, they're able to build those ADUs. So even though the cost of construction is high, but hey, so are rents.
Yeah, there's opportunities in the market. I mean, we're having fun being out there on the front lines, bringing new properties to market, helping investors exchange, helping them go over their options. If it's securing debt, figuring out the best solutions for everybody. So we had a great Q1. We're already in Q2. We should do this video again on a Q2 update the market on what we're up to. And this is really, really helpful. We really appreciate it. And just great job for both you guys for leading the charge in the marketplace and putting a lot of great transactions together.
Thanks so much for having us, Dan. It's always a pleasure being on.
Yeah, just send me a calendar invite and a gift card, and I'll be here.
A gift card, all right.
I'll get your coffee.
Yeah,
All right, sounds good. All right, everybody. Well, thanks so much. That's the market update for Orange County in Q1. We will continue to keep putting these out. So thanks so much for watching, and we'll see you on the next one.